The oil sands of Alberta, a vast expanse of energy potential, a land of innovation and controversy where black gold is extracted from the earth. Across the Atlantic, the ports of Rotterdam, Hamburg, and Gdansk hum with activity, a continent hungry for energy, seeking to break free from dependence and uncertainty. These two seemingly disparate worlds are on a collision course. Canada, once tethered to its southern neighbor for energy exports, is looking across the ocean. A bold move is underway, a shift in alliances with global consequences. Canada's oil, once destined primarily for the United States, is now being redirected towards Europe. This dramatic shift in strategy has sent shockwaves through the global energy market. The implications are far-reaching, with the potential to reshape alliances, ignite geopolitical tensions, and redefine the balance of power in the energy sector. This is not a decision taken lightly. It is a calculated gamble, driven by economic necessity and a desire to control Canada's energy destiny. But the path ahead is fraught with challenges. Can Canada succeed in forging new partnerships and navigating the complex web of global energy politics? The answer will have profound implications for Canada and the world. For decades, the United States has been Canada's primary energy customer, a relationship born of proximity and mutual benefit. The oil fields of Alberta flowed south, fueling the American industrial machine. But this once unshakable bond has begun to fray. The Trump-era tariffs on Canadian energy imports marked a turning point, a clear signal that the United States was willing to prioritize its own interests, even at the expense of its closest allies. For Canada, the writing was on the wall. Relying solely on the United States for energy exports was no longer a viable option. Diversification became an economic imperative. The search for new markets and new partnerships began in earnest. Canada, once content to be a reliable energy supplier, was now determined to chart its own course. But the shift away from the United States is not without its risks. The US remains a major consumer of Canadian energy. Cutting ties completely could have significant economic consequences. Moreover, the US has ways to exert pressure on Canada, both economically and politically. Canada's energy pivot is a high-stakes gamble, one that could pay off handsomely or backfire spectacularly. Across the Atlantic, Europe faces its own energy reckoning. The continent's dependence on Russian natural gas has become a liability. The invasion of Ukraine exposed the fragility of this reliance. The Kremlin's willingness to weaponize energy exports sent shockwaves through European capitals. Energy security became a paramount concern. Canada, sensing an opportunity, has positioned itself as a reliable alternative, a stable democratic country with vast energy reserves. The Comprehensive Economic and Trade Agreement, CETA, between Canada and the European Union has emerged as a potential framework for increased energy cooperation. But CETA faces roadblocks, held back by concerns over environmental regulations and the potential for corporate lawsuits. Even as Canada seeks to capitalize on Europe's energy woes, it faces stiff competition. Russia remains a major energy player, despite sanctions and international condemnation. Other suppliers, eager to fill the void, are vying for European contracts. Canada must navigate this complex geopolitical chessboard with caution and strategic acumen. The potential rewards of a closer energy partnership with Europe are enticing. Increased exports would provide a much-needed boost to the Canadian economy. It would also strengthen Canada's geopolitical standing, elevating its role on the world stage. No longer simply a resource provider, Canada could become a key player in shaping global energy markets. However, the path to energy dominance is fraught with obstacles. Environmental concerns loom large. Canada's oil sands are a major source of greenhouse gas emissions. European leaders, under pressure from their own citizens, are demanding cleaner energy sources. Canada must find ways to address these concerns while still pursuing its economic interests. Furthermore, establishing new energy infrastructure is a costly and time-consuming endeavor. Pipelines, ports, and other facilities need to be built or expanded to accommodate the increased flow of oil and gas to Europe. This requires significant investment and political will, both domestically and internationally. Section 5, looking beyond the horizon, Canada's ambitions in Asian energy markets. While Europe presents a significant opportunity, Canada is not putting all its eggs in one basket. The vast and rapidly growing markets of Asia beckon. China, India, and other Asian economies are hungry for energy to fuel their economic expansion. Canada, with its abundant resources, is well positioned to become a major supplier to the region. The Trans Mountain Pipeline expansion, a controversial project facing fierce opposition from environmental groups, is a key part of Canada's Asian strategy. This pipeline, once complete, will significantly increase Canada's oil export capacity to the Pacific coast, opening up new markets in Asia. However, venturing into Asian markets is not without risks. Competition is fierce, with established suppliers like Saudi Arabia and Russia already vying for market share. Geopolitical tensions in the region, particularly between China and the United States, add another layer of complexity. Canada must tread carefully, balancing its economic interests with its strategic alliances. Section 6, the American response, countermeasures, and the future of US-Canada energy ties. The United States, long accustomed to being Canada's primary energy partner, is watching Canada's moves with a wary eye. While the Biden administration has taken a more conciliatory approach than its predecessor, there is no doubt that Canada's pivot has caused concern in Washington. The US, despite its own efforts to boost domestic energy production, remains reliant on Canadian imports, particularly in certain regions. The US has several options at its disposal to counter Canada's shift. It could increase pressure on European allies to resist closer energy ties with Canada. It could also seek to strengthen its own energy partnerships with other suppliers, such as Mexico or countries in South America. However, any such moves carry their own risks and uncertainties. The future of the US-Canada energy relationship remains uncertain. Much will depend on the political climate in both countries, as well as the evolving global energy landscape. The two countries are likely to remain important energy partners, but the dynamics of that partnership are undergoing a fundamental shift. Section 7, a New World Energy Order, Canada's move and the global balance of power. Canada's bold move to diversify its energy exports is more than just a bilateral issue. It has far-reaching implications for the global energy market and the balance of power in the world. The existing energy order, dominated by a handful of major producers, is being challenged. New alliances are being formed and traditional power dynamics are being upended. Canada's emergence as a major energy player could have a stabilizing influence on the global market. By providing a reliable and diversified source of energy, Canada could help to mitigate price volatility and reduce dependence on politically unstable regions. However, it could also lead to increased competition and even conflict as countries vie for market share and influence. The global energy landscape is in a state of flux. The rise of renewable energy sources, the push for energy independence, and the growing urgency of climate change are all contributing to this transformation. Canada's decision to chart its own course in the energy sector is a sign of the times, a harbinger of the changes to come. Section 8. Conclusion. A high-stakes gamble, Canada's energy future hangs in the balance. Canada's decision to pivot away from the United States and seek new energy partnerships is a high-stakes gamble. The potential rewards are significant, but so are the risks. Success will depend on a multitude of factors, including the willingness of European and Asian partners to embrace Canadian energy, the ability of the Canadian government to navigate complex geopolitical challenges, and the response of the United States to this shift in the energy landscape. The world is watching closely as Canada embarks on this ambitious endeavor. The outcome of this gamble will have profound implications not only for Canada, but for the future of the global energy market and the balance of power in the world. One thing is certain: the energy landscape is changing, and Canada is determined to be a major player in shaping its future.